Today, folks, I gotta give you some updates on my $190,000 Canadian stock portfolio because the worst has happened. The market has rallied sooner than I would have liked it to, and that was to my own expectations. I have been stating that I have been desperately awaiting for the end of the year to roll over so I can top up my TFSA, my tax-free savings account, because I liquidated it to purchase a piece of real estate a few months ago, and I was hoping the market would stay suppressed and I could just build up cash, but I knew that wasn't going to be the case. I figured long before interest rate cuts, because there was such deep discounted value in a lot of these dividend payers, that they would start rallying back long before. And that is what we are seeing exactly right now. So many stocks are rallying, giving back 6 months worth of losses. Like, it's crazy. So we're going to review that, take a broader view of the market and my portfolio. And if that is a conversation you'd appreciate, damn it, hit that like button, because firstly, take a look. Tech, you had your time to buy tech. Tech rallied from those lows so damn fast from the bottoms that now it's overvalued. And now we're seeing a pullback. Tech is having a hard time kind of getting off the ground this week, whereas the rest of the market, all these dividend payers, boom, baby, they are blowing up. Look at the TSX. The Canadian markets are purely dividend payers. We finished up earnings season. We saw the Canadian banks and they're all rallying back, even though most of those earnings weren't anything crazy or anything good. It's just that they're so damn cheap. The market is starting to recognize it. And I've talked about this with telecom giants like Verizon. Look at Verizon. It's rallied back over the last 6 months and it only took a month. Look at TELUS, damn it. TELUS is one that I've been saying if I could just roll the year over, I would buy this in my TFSA. And if you bought it anytime in the last few months, you're starting to see really nice gains, especially from those October lows where it's up 16%. This came out of nowhere. And you go back to any video in October, and I've always stated that October seems to be the bottoming of the market. And I've been right, not out of anything other than speculation and gambling, but I put my money where my mouth was and I bought pretty aggressively on these ETFs. We're going to take a look at that. But obviously, there's still discounts here. We're not talking about full recovery by any metric. But if the stock stays in this area or can trend a little bit lower, I will likely start adding them as individual positions to my TFSA. But take a look, first and foremost, the corporate account. Many of you are aware I sold VDY out of this account. I took 20 grand that I had in it and I put it all into the S&P, which was I don't even remember now, a month or two ago. And then even a couple weeks ago, I put another couple $1,000, a few $1,000 into VOO and just cost averaging aggressively when the S&P was dipping. And that is paying off. I'm up 11%, $7,000, damn it. When the market is screaming the sky is falling, you better have that truck loaded up to be buying, because that fear only lasts so long and it only takes a month. You wake up and boom, you've missed all those incredible buying opportunities. You look at SCHD. This one everyone's been hating on. It underperformed the S&P 500, but really it's the deepest, most value discounted stocks in the market. The SHD trades for a price to earnings multiple of 14 or 15. Maybe before the rally, it's kind of come back about 10%, so I don't know what the PE ratio is now, but it represents kind of the Dow stocks. I mean, the bottom half of the S&P, and if you want value and great yield in the market, I don't think there's a better ETF that exists out there, so I'm sticking with it, baby. I've been reinvesting the dividends. I'm going to be buying more next year when I can top up my registered retirement savings plan, because on my path to financial independence, to perhaps one day retire early, I want to probably around the age of 40, maybe somewhere in there, depending on what my job looks like, I will be pulling the dividends out of this account. And I just want to not have to sell the position. So I'm just going to reinvest the dividends, let this thing compound over the next 10 years. And then long before I'm 60, I can just start pulling the dividends out and utilizing them to my advantage. That's the plan with this account. And then finally, VDY. Now, this was what I started buying aggressively because I couldn't wait any longer. I really thought the markets were going to start to rally back, and I should have been buying perhaps things like Bank of Nova Scotia or TELUS, but it was just easier, a little bit more cost effective to buy VDY, because I'll be selling it in the end of this month to transfer all this money over. And I've got another 10,000 sitting in my corporate account. I'll pay out to myself. I'm going to lose probably 20-30% the taxes, but that'll give me another 7 or 8 grand, and that'll give me the 20,000 to start lump summing and building back the huge amount I have, attributable to that account. And yeah, I'm really excited to keep buying this. I'm up just almost 3% on it, so I've been able to capture some of the gains in the rally here, and I'm glad I am. But just to keep me in the market and keep buying every week and get back into that habit instead of just stacking cash feels a lot better, because I feel like I'm not missing the full opportunity that might persist into the end of the year. So I'm getting about a 2.8% yield. The goal is to build up VDY to get this back over 3%. 3% is my happy medium, because I still get the growth, but I also get a nice happy medium of income. And yeah, it's nice. We're getting some really good gains off the market, and everything has just been hunky-dory, especially in my fiance's portfolio, because she holds a lot of those tech companies individually and a lot of these dividend payers, and we're going to be buying a lot coming into next year. And I'm very excited to start rebuilding back and getting excited, because I'm almost over that 200K mark. So that's my goal here, right? But taking a look at VDY, And we'll take a look at the ETFs and how they're performing because it's up 8%. Again, we zoom out on the 6 months and we've kind of really rallied off the lows. You look at SCHD, and SCHD is up 9% off those lows. Again, if we take a look at the 6 month, it's definitely back catching up some of those gains. VOO, a great example here, and what I keep touting is that the bottom half of the S&P, even though tech stocks are overvalued, even though the Magnificent Seven, the tech industry makes up like 20-25% of this ETF, even if those tech companies drop 10 or 20%, it won't really matter if the bottom half of the market rallies 20 or 30%, right? Because at the end of the day, like, there's so much money sitting on the sidelines, and that money's going to go where money's most efficient. And when you can't get it off, a GIC or a savings account anymore, it's going to start going into those dividend stocks again. So, I think we could still see continued rallies and even, an all-time high next year in the S&P 500 because we're only down about 3%, maybe even this year, depending on what the market does. And outside of that, we'll have to see what the market conditions bring us next year because I'm still looking at tech. It's not like I'm adverse to buying tech companies. I've been watching Tesla pretty aggressively, especially with the new Cybertruck release, which I just can't get over the bulls anymore. I think the bulls have become somewhat delusional in their price targets. Like, this is one of those companies where you have to wait 10 years for things to catch up before the price will ever explode again. I mean, that's what happened and up till like 2019, 2020 when it first popped. But you see me, Kevin, and Kathy Wood throwing out like $1,500 price targets for 2025 to 2027 base case. Meanwhile, the Cybertruck won't even fully be like starting deliveries basically until 2025 and starting at a price of 61,000. You gotta be patient with companies like this. So that's why I'm hoping there'll be continued downturns because I think in the long run, this is going to be a great stock to own. It's just really expensive today and it just needs to pull back a bit. And I really miss these kind of lows. I think if we get back into that $100 range, it'd be nice. But these are just my opinions and how I feel about the market. And I'd love to know what you think in that comment section below and what you've been buying. And the only thing I care about, not as financial advice from a clown on the internet, just always be buying. I mean, at the end of the day, just keep buying.